Databricks is marked at 25 times revenue. Snowflake, the closest public comparison, trades at 11 times revenue. That's a multiple gap north of 2x that no amount of growth differential can actually explain. And yet Databricks' mark is the one feeding the NAV of every evergreen fund holding it. Hey, it's Steph, and this is the Private Market Pulse. And today, we're going to get into the liquidity discrepancy trap. The consensus story on evergreen funds is that they democratize private markets. Retail gets access, and secondary marketplaces provide price discovery. Quarterly NAV reflects what the market is saying in real time. Now, that story is the product of a 3-year bull run in about 7 names, what we're starting to call the private Mag 7. But it has never been tested against a public market repricing event. Back in February, Stripe tendered at $159 billion, and Anthropic closed their $30 billion Series G at $380 billion. Blackstone's retail fund BXPE then posted a 20% annual gain. Even more visible, Fundrise's VCX, which listed on March 19th and spiked more than 1,700% above its IPO price, experienced a sharp pullback just days later. Here's how the plumbing actually works. Secondary marketplaces publish prices on a thin volume, under $10 million a day on even the most active pre-IPO names. These prices, aggregated by platforms like Caplight, feed into valuation committees at evergreen funds. The committees then set quarterly NAV, and retail investors buy and sell at this NAV. Rising secondary marks lift NAV, and rising NAV attracts retail inflows. Those inflows then get deployed back into the same secondary market, bidding up the next price. Nothing in that chain is illegal, but nothing in it is a price discovery mechanism either. In fact, it's just an echo chamber. And Caplight's own data shows that across the broader unicorn universe, more than 4 in 5 secondary prices trade below the last primary round. And the Mag 7 names are the exception. And they're the reason the whole evergreen cohort still looks healthy. 4 events in the next 120 days are going to mark this group to public market reality. Anthropic's revenue dispute with OpenAI resolves by May. The planned June roadshow for SpaceX will force the company to justify its valuation to a public book, and the expected July IPO reprices every private holder on day 1. And finally, OpenAI's reported Q4 target, a $1 trillion valuation with internal timing tension already public, marks the entire frontier AI cohort. And the retail holders of BXPE, VCX, DXYZ, and ARKVX, they don't get to pick which of these events will land first. Now, maybe the premium is real because these companies are category defining. Maybe the structured demand for private access persists even through a repricing. That very well may be right, but the evergreen wrapper has never been stress tested against 4 simultaneous public marks on names that collectively anchor 4 major retail funds. June is going to be the test, and it will be one to watch.